So for me, yes, I think growth can affect culture in a negative way. So when we did that, then we decided, well, how do we get to the most CPA firms? We joined associations. We became preferred providers of different associations, and that was a key aspect to getting in front of more. When I was a generalist, I'd finish a tax return and I'd tell somebody I've done everything I can and you owe $30,000.
Hi everyone, this is Shawn Parikh. Today we have with us Randy Crabtree, partner, co-founder of TriMerit. Well, he just told me that in his org chart he's told as corporate promoter. So I read some interesting stuff about him and I thought, let me call him on the podcast and hear from him itself. Randy does a lot of speaking and writing for accounting firms, apart from the services they provide to CPA and accounting firm, which is specialty tax credits and incentive. They have been doing it about a decade now, Randy?
Yeah, it's actually 17 years.
Yeah, so 17 years. So there are a few things that came across, as I would say, as milestones on Randy's professional journey, which I thought highlighting that probably on our podcast would be, according to me, a great learning experience and insights worth, for the professionals in the community, worth taking from. So, Randy, welcome to the podcast.
Well, thanks for having me. I appreciate it.
First thing came to my mind, how this growth happened.
Yeah,
from 1.7 to more than 20 million in revenue.
Yeah.
That's lightning growth. So how did that happen?
So it's an interesting story. So like you said, we started 17 years ago. The first 10 years of business, I was our managing partner. And it took me 10 years to realize that that's not my role. I have passion for starting businesses. I have passion for getting them going. I have passion for seeing the people inside the companies thrive. I'm just not a process, procedure, KPI, to me, which is minutia. And there's a backstory to this if we want to get into it all. But so 7 years ago, after 10 years of being managing partner, I gave up that role, and Andy Lane, who started TriMerit with me, took over that role, and he was built for that role. He's an engineer, and his mind works with all of these. He loves the processes and procedures, and as a kid, and I didn't know this, and I should have, as a kid, he played business. That's what he enjoyed, was pretending that he was running a business. And I'm actually mad at myself that I didn't know him to the level where I understood that, because I'm very passionate about getting to know the people you work with. So he took over that role 7 years ago. It freed me up to do the things I love, which is talking to you, talking to people out in the profession, seeing what's happening in the profession. I don't sell, but I think I deliver goodwill to the profession, and I think that creates revenue for us. And so when he and I got into these correct roles, that's really where we started taking off. There's more to it than that, if I can expand.
Absolutely.
Thank you. For the first 10 years too, we had nice growth. I mean, it was, the first year we did 700,000, and then we just kept steadily growing to, 1.7 million. But there was, a nice, decent growth every year, but nothing skyrocket. At that same time that we made role changes, we got very intentional. Intentionality is a big thing with me. You have to be intentional about cultivating all different types of things within a business. Vulnerability is a key aspect too, but I digress, which I tend to do. We've got very intentional about having a more diverse staff. DEI plus to me. It wasn't just the where somebody's from or what they look, but what their beliefs are, what their backgrounds are, where they grew up. Obviously race, religion, all that plays into it too. But we were too much, in my mind, clones of me for the first 10 years. And if we're a clone of me, we're not going to go anywhere. We'll have fun. We'll probably do okay, but we won't have enough variety of ideas coming in. And so at that same time, we got more intentional about that diversity. And again, to me, diversity means a ton of different things, and inclusivity. And that really created all these different ideas and new things, new ways to look at things and new skill sets. And so when that happened, along with he and I getting the same role and adding new services for the first 10 years, first 7 years or so, we were only research and development tax credits.
Okay.
Since then, we've added about 6, 7, 8 more incentives. So adding those services was big, but I think it's a combination of all those things. Letting people find their role, like Andy and I did, bringing in new ideas through new people and new services, and that's really was the for us the key to growth.
Well, I always feel, and this is my philosophy,
Yeah.
you know, when you are in such a hyper growth phase, especially for the leadership team, getting that work-life balance becomes a little challenging. I always say that if you are growing fast, or if you're making too much money in terms of margin, even if you're a smaller firm and not growing that fast,
Yep.
work-life balance is, you know, challenge, because if you're making more margins, which means you are at the center of the firm, you're doing everything, yeah, you're making great money. That's the kind of practice you have built. Or if you're in a hyper growth phase, growing 30, 40, 50% year on year.
Right.
So my philosophy is, if I always talk with accountants, we talk about work-life balance,
Right.
challenges for the team. I mean,
Yep.
you definitely are the evangelist on the culture, I would say. But I do talk with firm,
Yeah.
and my view is you have to make a choice between growth and work-life balance. But I have seen you talking about both. You guys have grown as well, and reading about you on work-life balance and culture and all of that. So yeah.
So for me, yes, I think growth can affect culture in a negative way. And I see little bits and pieces of that have happened, and I want to stop that immediately, whatever I see. And one of the things is, this year, you know, the culture we've created, we can get deep into culture at some point if you're interested, but the culture we've created is just one of people feeling respected and appreciated, and that their voice will be heard, and that they are going to be rewarded for what the work they do. But more so, it's just relationships. We're going to get to know each other more on a personal level than a job title. You know, sure, I'm a CPA. That's what I do. That's not who I am. I mean, sure, does that affect me at who I am? Yeah, at some level. But who I am is I love hiking, I love craft beer, I love sports, I love traveling. That defines me. And so when you build relationships with the people you work with, it helps create a work-life balance, because, you know, you and I are going to talk Monday morning, and I'm going to ask you how the weekend was. You know, I heard you went to this new restaurant. Did you enjoy it? Tell me about it. Or you saw this new movie. And so just that conversation, and then it's not forced, it's real. But that conversation, there's statistics out there that shows 40 seconds of you and I having a true conversation, you now feel valued. You feel like you're important to me, which you are. And so that's helped with that. But this is the whole point of this but for the first time in forever, somebody left this year, which surprised me. In 17 years, we've had 9 people leave. I mean, people stay because of the culture.
Out of 60, 70 people you
It's
have?
about 75
Wow.
now. Yeah, so we had 9 people. So
I need to get the secret sauce.
One is when there's somebody that doesn't fit the culture, you don't let that fester. We will ask people to be successful elsewhere, but the people that we want to retain and stay on, it's important that we all have that same ideals, that we're not. I don't say family, because family has different ideas to everybody else, but we're friends. The people I work with, I say we're a team of friends, which sounds corny maybe, but I really believe that I love everybody I work with, and I just want to know everything about them and what they're doing, and amazing. So, to wrap up this long diatribe on what you were saying and how we avoid the pit traps of growth, that was one. And we have to learn from that this person
Absolutely.
left, and why did they leave, and what were they dissatisfied with, and go from there. Other than that, when people leave, the last 4 people before that, one person, her dad has run a manufacturing business for his whole life, and she wants to go take it over, so she's going to work with him for 2 years before he retires. I mean, that's amazing. We celebrate that. She left. Sure, we miss her, and she was a great part of our team, but we're still friends, and we're excited for her. Before that, the person before that, he's a lawyer, and he wanted to go teach law school. I mean, it's not like he's going to a competitor or whatever, and if they did, whatever, that's their thing. But he wanted to do something different, and so we celebrate that. Celebrating what people are doing and their passions is so important that, just one more story. The person before that, I can go on, and people are sometimes amazed. How do you know where everybody goes? Because we have relationships. That's the key to culture, is relationships. The person before that decided at 40 years old, he wanted to go to medical school. I mean, how amazing is that? How could you not be excited for this person? And so he told us 6 months ahead of time because he felt comfortable. Like, we weren't going to say, okay, walk out the door tomorrow. No, we appreciate what you're doing. We really love you being part of this team. And so he gave us all this time, and then he started medical school. And he said, you know, I have some free time. Do you mind if I work part-time? Of course you can work part-time. And so that part of it affects it. I can go on on this because there's so many, I think, things that you can do to temper the negatives of growth to the culture. One thing we do is we don't track hours. We've never tracked hours. This is my personal opinion, but I think tracking hours is a culture killer. Nobody likes to track hours. Nobody does it correctly. It doesn't really matter what it says because you're going to force it to be something anyways. Yeah. And so we've found a way to value bill what we do. And so we've defined our worth through our pricing, but we've also been able to communicate what that worth is to the taxpayer through showing the value. And so the relationship between our pricing and what we feel we're worth and the client feels we're worth has kind of come together in a nice spot that we have a nice, very profitable business. And so I think as accountants, we too often undervalue our services. And so that's one thing we made sure we didn't do. And that helps us not have to work 80 hours a week to get to the revenue we want. That keeps us at 40 hours a week to get the revenue we want. Those are some of the things.
Okay, so one of the things that probably I should take from my original question, while you expanded to culture, which was my next question.
All right, nice.
So you did mention that communicating the right value for the services and getting charged right was one of the reasons probably you remained profitable throughout and helped you kind of maintain that growth as well. But it may help you, I mean, work-life balance has much more to it, but kind of one reason for work-life balance was that you charged properly, you remained profitable. Because of that, you were able to hire people and compensate them really well and retain them. Okay. Still, if I dig further, you guys are a virtual firm, right?
We are a virtual firm, and that's a good point.
Yeah, you guys are a virtual firm. So most of the hiring happens across United States. Good thing is you are open to wider talent access and beyond United States. If not just United States.
And we have done that too.
Yeah. So really when you are serving CPA firms and direct client both, I think your relationship expands beyond CPA firms as well.
Most of our business comes from the tax advisor, but we do go direct in a few of our services to some businesses too.
So again, coming back to this, you said you don't track hours, number one. You have this system where you go beyond your professional realm and talk to them and build those relationships. But when it comes to deliverables, when you're taking assignments, when you were working, and was growth never a target? It just happened?
So it almost did just happen because at the beginning when we started TriMerit, we did some pretty decent business the first year. And Andy and I were like, we don't need to grow this. I mean, we're doing well for the two of us. Let's just leave it like this. But then we were like, well, but we're doing so much. we should probably bring in another engineer just to help Andy, because he's an engineer, I'm a CPA, and the R&D tax credits we were doing, I understood, but I can't analyze the projects like an engineer can. So like, okay, we brought an engineer. And then it was like, well, since we have an engineer, maybe we should bring in a business development person too, so to make sure we can pay. And it was almost unintentional, the growth, but it was because we did good work. And so people recognize that. We have an internal motto of we're going to bring integrity to specialty tax by doing things the right way. Because specialty tax has had a little bit of a, I mean, just look at employee retention credit. I mean, that was a huge negative impact.
Absolutely.
And so there's been other areas like that we've seen in specialty tax. So we want to make sure we do the thing the right way and we educate it and all that. So from that standpoint, growth wasn't intentional, but after a few years, it's like, okay, people really like us. Why don't we go out there and service more businesses? And boy, if you want me to go on a diatribe on how that came out, I can do that too, because we were intentional on how we grew too. Because you asked me a question about, is it through the tax advisor, the CPA, the EA, or is it direct? We decided early on, and I think this is a key thing for us, that we were only going to go through the CPA firms. And again, I'm going to say CPA generically because tax advisors, but we'll go with CPA. The CPA firms, because we want to educate them. We want them to be the ones to identify the opportunities and be the hero for their clients. We want to be behind the scenes for them. We're in front too. The client knows that it's us doing the work. But we wanted them to be the ones that get the kudos in the long run from their clients. Yes, we just saved you $100,000. Yeah, we didn't do it, we helped, but your accountant identified this opportunity, and that's who brought it. So when we did that, then we decided, well, how do we get to the most CPA firms? We joined associations. We became preferred providers of different associations, and that was a key aspect to getting in front of more. And there's pros and cons to that, mainly pros unless you do things wrong. And we've avoided that. But once you get in and you do good work for one firm, I mean, that spreads immediately. There's an association here, the CEO of the association, she's at this event you and I are at right now. Yep. And we've been working with them for about 13 years. And I think we do work with most of their 90 members in their firm, in their association, because that positive reputation gets around there. And, so
I think one more thing that probably aligns you and us is we don't want to be just service providers to CPA and accounting firms. We want these CPAs, and as you rightly target, they should be advisors, trusted partners to their client, adding value to their client. So when we try to do that, even with us, we have implemented tax advisory services in several clients.
Nice.
So when we try to do that, it automatically augments, the relationship automatically goes beyond what because you're making sure that what you want is their practice to grow. While that happens, we continue to be their partner in their growth.
Right.
So I think the primary I would say ideal client persona became tax advisor. That became your go-to market channel. And you continue to kind of put CPA's interest and client interest aligned, when they're working. And when you go through that route, you also get a lot of validation that these are the partners I've been working with. And, so a lot of viewers that would be watching this podcast would be actually CPA firms, would be not probably top 200, but from below 200 to about 1,000.
Right.
That's our clientele as well.
Right
from 4 million to 20-25 million. We do work with some of the large firms, but 90% of the work constitutes between anywhere from $1 million to $30 million revenue firm. So, and I think we have a few clients in common as well.
I'm sure we do.
So now, question specifically to them, and again, I would like to learn more, how this partnership can add value to CPA's existing business. I'm sure there are benefits which their clients are missing in various arenas. And in second step, you can answer that how this relationship between you and the CPA firm works.
Yep. Yeah, so for us with them and adding value to them, it's the education part. I'm huge on education, so I'll educate on anything, well, anything I'm passionate about. Stick to your passions. But I'm passionate about credits and incentives. And so when I go out there, I mean, I get excited, and well, I think I've gotten a little excited today too. But when I get excited, and I'm like, you have such a great opportunity to help these clients, and if you have any clients that own a property, this is what we need to look at, and this is the opportunities, and here's the value. And so I get out there and I'll explain this to them, and it's education and getting them, value. In addition, we're very big proponents of just delivering goodwill to who we work with too. And you mentioned that I do a lot with culture, and I do a lot with mental health awareness, and don't treat burnout as a badge of honor. And I tell people I feel like I live at the intersection of my skills and my passions, and I want everybody to get there. So these are the types of things that I often am speaking at these association events. It's nothing to do with R&D tax credits or cost segregation or renewable energy credits. It sometimes is, but most of the times they want to hear this other stuff. Again, I'm just adding value to them. I have a personal mission of, and I'll see if I can say this correctly. My mission is to have a positive impact on the lives of the people in the accounting profession by inspiring change. It doesn't say anything about specialty tax or anything. That's just what I want to do. And that when people see that and they see that the goodwill we're delivering, they know I'm tri-merit. They understand that comes to them, and they get that.
It rubs off, yeah.
Yeah, it rubs off for sure. And then the second part of the question was?
So even the first part, how CPA firms, when they associate with you,
yep,
would be able to add value in the sense, what are the areas and how?
Yep. Yeah. Okay. So our services in general then?
In general, how the client can benefit, how
So what we do is let's just say there's an R&D tax credit opportunity. We have a client, the CPA firm identifies an opportunity. They come to me, well, not me, somebody in our team.
Yeah.
They know not to come to me because they would go to someone else, and just say, hey, is there an opportunity here? Well, let's look. Let's dig into it. Now, the cool thing is, with everything we do, it's easier for us to value bill because we know the value of the opportunity.
Yes.
Hey, we just saved you $100,000. Well, for the CPA firm, if they want to charge something additional for that because they actively were involved in it, they can do that. We also do a fee share on all of our services. It depends on the service. It changes, but they get additional revenue because they're part of that. And I'm a huge proponent of automation, obviously super important, and that was discussed at where we're at now, how important automation is and value of that. Delegation, we too often do things that we may not enjoy or we may not be experts at, but we feel we have to do it as accountants, and this is an area where they don't have to then. They can just identify opportunities and they can give it to someone else. So I'll automate, delegate, collaborate, eliminate, all of these things, and these are things I'll talk about too, is important. So for them, I think they get a little bit of all of that when we're working, but revenue is there. So the revenue's there. They can bill for these services because they can show the value, and we have a fee share available for them. So their clients save money, they make money, we make money.
It's a win.
Win-win-win.
Yeah.
I mean, it's honestly, when I was a generalist, I'd finish a tax return and I'd tell somebody I've done everything I can and you owe $30,000. And it still hurt to say that. Because they don't
Nobody wants to pay tax.
But now we go out there and we say, okay, we just saved you $100,000. It's just a happier experience for everybody. And so we bring joy to their clients and to the accounting firms.
The value when you deliver that to client beyond your compliance services, that only improves the relationship that you are building with your client. So I always see it from not just from financial perspective. We are accountants are managing relationships, not tax, as you mentioned.
Right.
So when this happens and somebody gets that positive impact, really, in terms of tangible, this thing, that that is the big impact.
Well, people say I smile all the time. Maybe that's why, because this is so fun. So
Yeah. Well, I have a few more questions. So you transitioned and became virtual firm.
Oh, yeah,
So
yeah.
you were never virtual firm before.
My first accounting firm was not virtual at all. When we started Trimerit, we were partially virtual, not fully virtual. In fact, the first 5 years of Trimerit, we had people working out of my house. Which I look back and go, why did we do that? Why couldn't we have done virtual there? We didn't
But
really
back then,
understand.
technology was still evolving.
It was, yes, it wasn't to that level. But that being said, I mean, I had an office in my house. Our current CFO, who I had just hired out of college, was working in the living room. Our current head of, or one of our business development people, he was heading our inside business development, and now he's doing outside business development. He was in the dining room. Another person who was one of my clients in my accounting firm, he would be there occasionally, but he lived a mile away from me, and we'd be on the phone talking. He just be talking to clients. So we were. But then we also had engineers in Michigan, we had engineers other places, and so we were partially virtual, partially on site. We moved out of the house and we got an office then, and we would all go into the office every day, but still half of our team was virtual, working at their home. So we were a combination of both. And then as we grew, it just got to the point where we were hiring people all over the country and our growth has really come. The major growth started around 17, but then 20 hit, and it was, everybody figured out virtual more. We were doing it at that point, but then when COVID hit and 20 hit, it's just like, okay, we don't need to go to the office. Why are we going to the office? Let's just continue this virtual, and started with Zoom, and then we transitioned to Teams, and so we use all these tools. Maybe somebody goes to the office once a week, one or two people, that kind of thing. We have an office. We're currently in Chicago here, so in the Chicago suburbs, there's an office, but nobody has to go, nobody's required to go. But culture is still, can I talk about this?
Yeah, please.
Yeah, culture is still super important, and people always get concerned about, I hear this all the time, well, how can you create a culture in a virtual environment? It's not possible, you can't do it. And I'll guarantee you this, we have done it, and you can do it, and it's still all about relationships. You can build these relationships on your Teams calls, you can do it, you can have one-on-one calls. Every single time we hire a new person, I get an automated email from our payroll company that says, hey, Sally Jones is going to start on this date. My assistant will set up a call with Sally, and I don't get involved in the hiring process at all. So I don't even know when we're hiring. I kind of know, but I don't really know it. And so we set up a call, and I get on that call with the person, and first thing they probably wonder, who's Randy and why is he calling me? But then we get on it, and we talk about anything but business. If they want to ask me about Trimerit or something, we can talk about it, but I just want to get them know them on a personal level. Back to relationships. In fact, I have a saying that weak cultures are based on rules, while strong cultures are based on relationships. So for me, everything's about the relationship. And so we get just to know them. And I learned so many interesting, cool things about these people in that first call, the first interaction we ever have. And I think that sets the stage of not, hey, tell me how many jobs you got done since you hired a week ago. No, I'm not going to worry about that. I want to know who you are. So we do that. We also on Teams calls, at the end of a Teams call, not everyone, but we have if it's a marketing call or a business development team call or a project management call, somebody at the end of that has the opportunity to spend 15 minutes just telling us about themselves. They can do a slideshow. They can hold their kids up in front of the camera, or their pets, or show the trophies they've won, or the instruments they play, or the art they work on, and somebody gets to do that. So those are culture building tools that we're able to do virtually, but I still think it's super important to have the face-to-face.
There's a book I'm sure you must have read. The book is called No Rules Rules.
So I'll have to admit, I don't really read any business books.
Oh,
I
okay.
probably should, because they all sound cool.
That's book written by a CEO of Netflix.
Okay. And what's it called?
No Rules Rules.
No rules. Okay.
Yeah,
I like it.
so it talks about the culture, and it talks about building, how you want to build organization. And one of the element which I was reading, it talks about transparency.
Oh yeah.
So in our company, we always say transparency is also one of the important element of culture we build. Telling them probably upfront, it may be not the best things for somebody to listen, but still being upfront and saying that these are the expectations, this is how we operate, this is how the challenges would be. So I realized transparency is one of the key thing in building, which I was reading in one of your blog when you talk about the culture, that element, and I was able to relate, and even that book talks about it. You mentioned about, I think, let's say having a partner track plan available in open for everyone. In our case, we have our MIS open, a lot of information open, so everyone can access it.
Yeah, you're right.
So I would like you to allude on that fact, how firms can create that culture of transparency.
Yeah, and so that's important, and this is something that we've learned that is super important over the last handful of years. And so what we do is we have a quarterly state of the company address, state of the union address, where Andy will run it, and some other people, Nick, who's our CFO/partner as well, and a few other people will get on it. I seldom talk on those. I talk enough. I don't think they want me talking anymore. But it's a quarter, and it's transparent. It's everything. It is, here's the revenue we had this quarter. Here's the profit margins we've had. Here's the new business we've had. But not only that, what happened, here's our goals. And the cool thing is when we set goals, because you asked this earlier about growth and all that, when we set goals, it's not, hey, we want to be $50 million in the next of revenue in the next 10 years or 5 years or whatever. It's, we want to have 10,000 positive impacts on taxpayers by this date. This is a goal we have out there right now. We're at 3,500 right now. And so it's just a mindset change of, we just want to have a positive impact on the people we're working with. Now, you can equate one positive impact to a revenue number. We know how much each job brings in on average. I mean, they're all over the board, but when you average out a year, we know that. And so we just look at that as a, being transparent on, okay, we want positive impacts. Yes, we'll equate that to the number. People know what we want to do. If there's a down, first quarter of this year, super down quarter for us from a cash flow standpoint. We didn't hide that fact. I mean, we let everybody know that things are really tight right now, and this is why, not just they're tight, this is why it's going to turn around by the fourth quarter, which it has now too, and we knew that was coming, but people rally around that. They feel like this is their business, they're part of it, they're having an impact on taxpayers, they're having an impact on their business, their voice is heard in the business. I've had so many people in our company that have come up with ideas that we've implemented because they feel free to share things, not like, okay, well, nobody's going to listen to me, nobody cares. I mean, we've had, multi-million dollars of revenue streams come from somebody that just started with our business that says, hey, well, why don't we do this? I'm like, okay, we'll do that.
Well, one thing actually reminds me, we all as leadership of the business, we always say that we want people to work with ownership.
Transparency, that's where we were.
Transparency, yeah. We want people to work with ownership, right? Let's say if you want everyone to work with ownership, the owner would have maximum amount of information so that they can take most important decisions.
Right.
So if you want people to work with ownership, they need to have that information for them to operate as an owner of of whatever decision making and the span of control that they have. So we operate from that philosophy as well.
Nice.
That transparency is important for people to feel belonged. But at the same time, when you ask them to be the owner of what they are doing, well, they need to be treated as the owner then. And owner needs to know a lot of stuff beyond just narrowed numbers. they need to know a 360-degree view. And we also have this culture where we have this MIS, open MIS culture, we call it. So our sales and business development would also know something which is happening on the back end.
Yep.
And our customer relationship person or our customer success person would also know how things are happening on the sales front.
Right.
So giving that 360 view will only help them make, which quality of client we should take.
Yeah, no, I love everything you're doing. In fact, can I come work with you?
Sure.
Okay, thank you. Let me finish up one thought on this, and I'm going backwards for a second, but when we talked about the virtual and all that,
yes,
the one thing is it's still important to get together. And so twice a year we do a company retreat where we fly everybody into a location. And we do this twice a year. The bad part, because of cash flow, we did not do it this year. And I think that's one thing that I can see affecting culture a little, because we haven't been face to face. We will, we already know we got them installed again next year, and so we're gonna have to counteract that negative impact of a cash flow crunch we had at the beginning of the year. But in those meetings, man, relationships just go through the roof. I mean, it's not, we'll do a state of the company address on that, but we do more fun relationship building things in that really help. So just going back, sorry, to virtual, I'm going backwards. In virtual, you can build a culture within that, but I think it's still important to have the face-to-face. And the reason that we can do that financially is we don't lose people. And the cost to replace one person is probably less than we spend on one of those retreats. So if that's going to help us retain people, obviously, I would do it anyways, but it also, we're accountants, there's a financial impact to that because we don't lose people.
And it allows you to operate in a more leaner way, and that benefit is passed on to the client itself,
You got it, yep.
So if it allows you to have the tech structure which takes care of the client. Well, last question.
Yep.
The firms that typically intend to work with you, some of, yesterday I expressed my intention that I think the partnership can work. So how would an accountant, for example, if you want to quantify an impact, and I can say this is very hard, but let's say a smaller accountant doing 1, 2, 3, 4, 5 million in revenue.
Yeah.
Typically, let's say clientele would be small business to mid-sized businesses. How this firm should look at this partnership with you in terms of benefits going to the client in a quantified terms and the revenue increase for the CPA firm.
Right. So we have a smaller firm that we work with in just West Coast, and I don't know the revenue. It's a couple million maybe, but every firm's going to have clients that can benefit from the opportunities that we're able to bring to them. So it was last year. She reached out to me and she thanked me for the revenue share that we did with them. She says, I was able to give every employee in this company a nice bonus at the end of the year because of the work we did with you.
The additional stream of revenue that came in.
Okay. Exactly. And I'm like, okay, one, I'm going to tear up immediately because you had this positive impact on the people you're working with. But two, that's just thank you so much for sharing that, because that helps us realize that we are making an impact, not just on the taxpayer, but even further than that. So,
So there is no quantified number, but I mean, it continues to be a very significant revenue stream as you progress, and typically the impact is achieved in first year, second year. Is this mostly going to be an ongoing?
Oh yeah, ongoing. We have a firm that we work in the Chicago area here, which is the very first CPA firm we ever did work with, and I mean, honestly, I couldn't even quantify, but I'm guessing there's a chance that we've shared $1 million in revenue with them over the last 17 years or something, which is still a decent amount every year. I would think it's probably at least that. So yeah, it's
and most of his assignments are an ongoing assignment, year-on-year assignment.
Depends on the service. Research and development tax credits, it's an ongoing thing. Cost segregation, can be multiple times for one taxpayer, but it's usually we're in there once. Renewable energy tax credits, there's there's so much to unpack in renewable energy. We can't even talk about that now. But some of those are ongoing, some of those are one time, some of those have a date where they stop, but it's 10 years in the future. So most of the services we do, there's at least an opportunity to continue.
So, how can a CPA get education about this? Because these people actually are going to be your partners, advisors. So they need some education so that they can identify and present to the client. And second phase, you guys can get into partnership, right? So do you do that kind of thing, or you have something?
Yeah, we'll go one-on-one with the firm and do an education, whether it's a webinar or it's in person, and where we'll go out and just talk about whatever services they're interested in. We actually do webinars monthly that anybody can join. I did one Tuesday, which was actually how to come up with a mental health plan going into tax season. So it wasn't about the services, but we try to do one like Goodwill like that and one specialty tax services every month. So we do that. And so those are the opportunities. We have a YouTube channel with all these going to our YouTube channel, so you can go look at them anytime. And actually, I host a conference too that we started 2 years ago.
We partnered with you as well.
You were part of that, and I appreciate that. Thank you so much. But in that, we started the second year with having a tax track in there where we talk about,
the conference.
Selfishly, we figure if we're funding this conference, which is expensive to do, we should probably talk about tax a little bit in the conference as well. So there's that.
You can announce the conference name as well.
Oh, okay. So it's called Bridging the Gap. This will be year 3 coming up in 2025, January 22nd. Through the 24th in Denver at the Marriott Tech Center. Very excited. Registration, I'm not sure what date you're running this, but will open or already did open probably beginning of December of 24.
With that, I would like to thank you again for taking the time out. I think with what you're doing and the impact, I think we can go on and on. And but yeah, thank you for taking the time out. We met here at the PE Summit, and I think we just decided that we will talk and host this. So thank you again, and graciously accepting the invitation. Thank you, Randy.
Thank you. This was a lot of fun for me.